Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike York. Today is Thursday, May 19th, and a whole lot of economic news today, including we'll talk a little bit about the Fed minutes that came out yesterday. So we'll start with the economic news that was scheduled for today and what's driving the markets. We start off with the jobless claims. It took a little bit of a drop, but we're still over the $400,000 or 400,000 applicants applying. So, the market's kind of liking because it dropped from 432, which actually was revised a little bit higher to 438, and it went down to about 409,000. So, it's still not good enough, to be frank, but markets like it because it went down rather than went upwards. Existing home sales took a dip, another dip. It was up, prior month was up 5.09, now it dipped down to 5.05, and it was actually expected about 5.25. So pretty big spread there between what was expectations and what reality was. Another thing concerning news is the leading indicators. The leading indicators had a big drop of 0.3%. First time we've had a drop in nearly a year. Last June was actually the last time we had a negative. So you can probably start hearing some more talk about double dip recession. That could be a hot topic, and numbers. Depending on what things happen, that could very well happen here. We're now in the woods, as I think everybody can kind of relate to. And then the Philly Fed, manufacturing's been pretty strong. It went up, but very, very low. It was up 3.9 when it's been way up like around 20, like 18 and a half prior month. So it's been up right around in the double digits, but this time it went down to 3.9. So pretty big, almost like a break right there came in there. So we'll kind of right now the stock market's up a little bit, and it's based on what was mentioned a little bit on the Fed news as well as the jobless claims. That they're feeling a little bit optimistic that that more people are going on unemployment versus there's a little bit of a drop. So up a little bit. We'll take a look at what the bond market here in a second is, but what the Fed basically said in their minutes, it kind of shortened it up, summarize it, was that they're basically they're coming out of quantitative easing too. There's no clear-cut plan as to what they're going to do. They're just going to kind of wait and see where things fall. So we'll kind of see, what's going to happen. But it plans to end in June. They're kind of waiting. There's ideas that maybe they might wait a little bit, and there's no plan. So the stock market didn't mind that and kind of rejoiced a little bit. But as we'll see in the bond market here in the next few seconds, is that they didn't react so well to it. So we'll go into the bond market here now. All right, folks. So here's the bond market as we were talking about. As we saw yesterday, it was down a little bit, and as soon as the minutes came out, we had a huge drop. We lost over 40 basis points in the bond market, which drove interest rates higher. So the red primarily means when you see these Japanese candlesticks, red means that it's gone downwards, and green means it's going up. Now, and then of course, when we look at these levels here, when we're going downwards, that means there's less demand, so they're paying less for bonds, and that means interest rates go upwards, and vice versa. So when the bond market's going up, when there's demand for the bond market, people buying our debt, that means interest rates are being driven down. So this morning we had an opening gap of about 22 basis points. We lost over almost approximately about 70 basis points from beginning of yesterday to the beginning of this morning. And as you saw, we kind of dipped down a little bit, and then we even went up to kind of close up the gap. Now, if we can keep above this floor here, we'll be okay. But we did break the trendwards going upwards, and it'll be important to get back into it over the next couple of days. Tomorrow's going to be slow. It'll be more probably headline news as there's no economic news releases. But interest rates did go up over the last 2 days, and again, as you can see, there's been a pretty big drop here in comparison. So it wasn't just an eighth or maybe even 1/4%. So, but yeah, just understand that the market's just, and this is primarily due to today was primarily due to the little bit of the Fed digestion because there's no clear-cut plan. Bond traders want to see action, and there was really no plan of action by the Fed for when they complete the quantitative easing coming in June here. So that's what kind of upset them a little bit. And then today also the drop in the initial jobless cleanse a little bit. So even though it's still over 400,000, it was an improvement from the 438 down to 409. So I mean, I would kind of expect to see this gap kind of close. It did kind of a little bit so far, but we'll see how things progress. If we can stay above this level, we might be okay and have a bounce back upwards. All right. So, but we'll kind of take a look. So I'll catch you guys tomorrow. You guys have a great day. And folks, I'm also a loan officer. If you're looking for a mortgage in the state of California, I can also help assist you. You can check out my other websites here at obviously at Mike's Daily Market Report and MikeBjork.com, even CaliforniaMortgageTips.com and the Mike's Homebuyer University.com. I have some great resources there. But feel free to give me a call at 310-694-3544. I can do refinances and I also do purchases, so I can help you get pre-approved to buy that next home here. So thank you and keep me in mind.